Welcome to Billion Dollar Startup, where we bring you visionaries and disruptors who have started, scaled, sold, or invested in a billion-dollar startup, also known as a unicorn. We also feature tech founders who are building the next billion-dollar startup. Billion Dollar Startup is a unique podcast sponsored by DragonX Capital, the venture capital firm that concentrates on seed and early-stage tech companies with the X factor.
Welcome back to Billion Dollar Startup. This is Dan Lok, managing partner of DragonX Capital. Today, I'm super excited to bring you the CEO of one of our active portfolio companies and co-founder and CEO of Stay Tuned. Serge, welcome to the show.
Thank you. It's awesome being on here. Excited to do this.
Well, I have so many questions, but first, I think maybe just share with our audience a little bit about your background, your story, and where you grew up.
Yeah, so I was actually born in Beirut, Lebanon, in kind of during the Lebanese Civil War, which was an interesting experience. We immigrated to the U.S. In the mid '80s, around 1986. My dad is an entrepreneur. My mom comes from a family of entrepreneurs, and we settled down in Southern California in Los Angeles. Lived in Los Angeles for until I went to college. Ended up going to Stanford, studied mechanical engineering and math at Stanford. And then after Stanford, worked at Morgan Stanley in investment banking, and then worked at a big venture capital fund in Southern California, LA. Since then, sorry, venture capital fund in Palo Alto. I get confused the Californias. And then went to Harvard Business School. And then after HBS, did a bunch of different things. Initially started in the music industry.
Oh, wow.
Worked at Sony Music. I was working on the initial licensing deals in 2009 with Spotify and the other music streaming services, which was a very cool experience. The music industry was like dying. And then obviously it grew back up. And we did a lot of those initial licensing deals, which were a combination of equity and advances. We did one with U2. We structured something called Vivo at the time. So that was a lot of fun. In 2010, I joined Google. I initially was helping launch Google Wallet, which was our mobile payments platform. It was one of the first fintech mobile payments platforms. And then I joined the Google Play team, which was Android Marketplace at the time. We ended up growing the App Store to much larger. We were just at the early stages. I was managing the developer ecosystem, primarily around sports, news, entertainment, media, that whole world.
How big that division was? Like you must grew it to like.
I was tens of billions. Yeah.
Tens of billions of dollars.
Yeah.
Amazing.
So, Google Play and Android are massive. So did that for 8 years. And then decided that I wanted to start companies and invest in companies and advise companies. I was getting close to my 40s at the time, and just was hungry to do more. Google was an awesome place to work, but I had an itch to build and grow companies. I've since then advised startups, invested, done a bunch of different things. But I think for today, I started a company called Stay Tuned. Stay Tuned is a e-commerce software suite across Shopify. And we've been working on this for the last couple of years, have an unbelievable team around it. My thesis around Shopify is primarily that Shopify is cannibalizing all other direct e-commerce platforms. So if you look at Magento, you look at Demandware, you look at all these traditional e-commerce platforms, big commerce. Shopify is taking share. Shopify is launching headless. Shopify is launching all sorts of different tools and capabilities that makes it possible for any size merchant to launch a business. I also realized Amazon is growing as well, and there will be a software suite around Amazon. And this was largely going to be a duopoly between Shopify and Amazon. So what we quickly, me and our founding team, which, Randy Jimenez, who is co-founder and CTO, super experienced CTO, multiple venture-backed outcomes, worked at Single Platform, Thusio, and Ollie. We also have a woman named Laura Lynn Drury, who helped us start the company. She was an early product manager at Warby Parker and worked on multiple Shopify brands. Great corp dev person who comes to us from Constellation Software. It's a big software roll-up. So we had this team
from Toronto.
From Toronto, yeah.
From Toronto, man.
Exactly.
Yes.
You got it. We actually have quite a few Canadians. I think we have 3 Canadians.
Cool.
So we put together this team to kind of go out and build and create the largest Shopify software suite. We like to say that we want to be like the Adobe or Salesforce of Shopify, where every merchant who is building an e-commerce brand can come to stay tuned and use our tools to drive growth of their brand. So that kind of led us there. Shopify is a big app store, very similar to Google. We had a lot of really strong expertise in understanding the ecosystem. We've been using debt to make acquisitions and grow our software stack. So it's been
well, there's so many things I want to dive into.
First of all, so that's the story.
it seems your background, like with Harvard Business School, with Stanford, like working at Google, working at Sony, it seems to me that it's almost like all those experiences, like all those life experiences, is kind of leading you to something like this, right? Everything that you've learned in the past, working at the big company, and now to this. At the time, what inspired you to start even Stay Tuned? Like, how did you get the idea?
It's funny, like we started doing something completely different. So me and Randy were working on something completely different and somehow ended up in the Shopify ecosystem. And we kind of looked left and right and we're like, well, we can build one app or we can have a suite of apps. And then there was a lot of familiarities. So when you think about companies and startups, everyone talks about product market fit.
Yes.
Which is very important. But the most understated thing is founder market fit. And as a founder, if it's a market that you're familiar with or there are familiarities and you're a subject matter expert around something, you excel. For what we are doing, there was a very clear founder market fit. I understood app stores. My other founders understand e-commerce and building SaaS. And those things came together. Yeah. I think if you look at everything that's happening in the world, everything is built on an app ecosystem, right? Yes. There are apps on Airbnb, there are apps on Shopify, there are apps on Google, there are apps on Apple, there are blockchain, all apps built on top of blockchain, right? Everything is app ecosystem if you're thinking about it. So I found the most profitable app ecosystem in the world right now. Shopify had the lowest rev shares. For example, Shopify only charges 0% of a rev share on their apps for anyone generating less than $1 million and 15% for anyone generating over $1 million. Apple and Google charge 30%. Facebook charges 45%. So super profitable. Shopify is still growing 20% year over year.
If I remember correctly, didn't Shopify start in Canada as well?
It did, yeah. So Shopify, so the story behind Shopify is they basically, Toby, the founder of Shopify, wanted to build a snowboard shop.
Yes.
And I actually love to snowboard too. I was, it goes in our family, me and my brother.
Whistler, man, you know it.
Yeah, there you go. But Shopify wanted to build a snowboard shop. That snowboard shop, Toby wanted to build a snowboard shop. He didn't know how to get a shop up. And so he built his own tooling. And when he ended up building his own tooling, he realized this could potentially be a really great way to get people who are starting their own businesses an ability to sell goods. So if you look at Shopify's ethos, it's not specifically around e-commerce. It's around entrepreneurs building businesses and growing businesses.
Yes.
And so that's what they do. That's what that's what we are specialized in, right? We're entrepreneurs. We work with founders. So we're very aligned, right? We want people to build businesses and sell them to us and build in our software suite. Shopify is all about entrepreneurship. Their focus is empowering entrepreneurs, which you ask why you're in the space. I love entrepreneurship. I'm immersed myself in and around the entrepreneur community, and that culture and that mindset is something that is really, really, really compelling to me.
I think, Serge, I think what impressed me and Ivan the most when we talk, first of all, with your track record, obviously, right? What you've done in the past, your team, amazing team, right? But most importantly, I think it's a little different because usually when we invest in a SaaS company, we invest in a platform, a product, right? In this case, Stay Tuned is more like a business model, right? With the acquisition model, which is very different. Maybe you can talk a little bit more about that, like what's your strategy for growth and what's your vision for the company?
Yeah, so a lot of companies, when they start, they're trying to solve a problem.
Yes.
And that's actually the best way to start. Find a pain point, solve a problem, and then go from there. We weren't necessarily trying to solve a problem. And I know that sounds very different.
Counterintuitive, yes.
Non-intuitive, that's the right way. We saw an opportunity that we wanted to take advantage for is the wrong word, but we saw an opportunity that we wanted to jump into. So for us, it was less a problem and more an opportunity. And what we've noticed is that there is a time right now where this ecosystem is growing so quickly that we could potentially build a bunch of tools and apps around a specific opportunity rather than going in and solving a problem. And we, that's different. Most VCs look to invest in a hero product.
Yes.
We have multiple hero products, right? People say, hey, you don't have a hero product. I'm like, well, actually, we got one of the biggest event ticketing businesses on Shopify. We have a massive offers business. We have a massive size chart, one of the leading size chart. Like if you think about where e-commerce is going, and if it's all moving onto Shopify and Amazon in the future, well, we're basically going to win some really compelling categories, and we'll have multiple hero products. The other aspect of what our hero products look like we think of it as our people, our process, our integration, our resources are our product, right? Our ability to integrate and build a suite out of something that an entrepreneur has built into a larger suite. That's our product. And then it goes full circle. So what are we solving for these brands? We're helping them drive revenue. So as much as that's not a problem, it's a need, and we solve needs for these brands.
So the merchants that are using the apps, you are able to go back to them, and as you grow that portfolio of users, you can always go back to them when you make an acquisition. You can say, hey, here's another tool that can help you sell more, get more customers, and generate more revenue. Is that the idea?
Exactly. So what's happened, there has been a seismic shift inside of like the e-commerce world. Facebook ads and a lot of ads are not working as well. And the reason for that is Apple instituted IDFA. Google's got some version of theirs, and targeting customers has become a lot more expensive and a lot less effective. So what that means is when a customer needs to go to your site, they want to be able to, the brands want to make sure that they're converting, right? So, or spending more and make sure that they're retained. So we tend to say, hey, we're focused on conversion, AOV, and retention. And the reason why those three things are so important to us is we realized it's much more expensive for a brand to bring someone onto their site. So the importance of retention, AOV, and conversion is higher than ever than previously, right? Because we like to capitalize on specific trends that are in the market. And this was a very clear trend, and there was a very clear opportunity for us there.
So let me see if I understand this correctly. So basically, because the cost of acquiring customers is getting higher and higher, right? So now every single visitor that goes to the e-com site, they need to maximize, right? They need to maximize the conversion, they need to maximize the average cart value. They want to make sure they come back again. And within that, it's not even it's not a problem, but it's a must-have. Because if they don't, they're losing money.
Exactly. They need this, right? And so that's the types of apps that we're targeting, right? We have a size chart, right? We have offer upsell app, right? We have a box bundler. These are all things that drive conversion, drive AOV, drive retention. Like
well, this is also kind of like, the Gold Rush, right? Where a lot of people going there, like going online, entrepreneurs starting a business, they're mining gold, but stay tuned. In this case, we're the shovel sellers, right? We sell them the shovel to get the gold.
Exactly. And look, it's a really good place to be because software is super high margin.
Of course.
And because software is so high margin, we can use debt to make the acquisitions and find these products that already have product market fit. So there's a little bit of financial engineering going on as well, right? We take out debt to acquire these businesses, and then we use that debt to buy the businesses, and then we use our people to grow the businesses.
I'm curious because it is fascinating with something like this is because of your background, and that's another thing I was so impressed like with when we talk, that you're not just a founder because of your VC experience, you understand finance, you understand how VC works, which most founders do not understand how that world works. You understand both worlds, right? So
yeah, and look, ultimately, I'm an entrepreneur that wants to I like to make money. I like business.
Of course.
I like, as much as I love great products, my focus is maximizing returns.
Yes.
And look, I have an MBA. I've worked in business, even though I was an engineer in the past. This is a financial opportunity right now with these assets that we're buying. And we've assembled an incredible product and engineering team around it so that we can grow it.
So for our audience, for their clarity, the acquisition model is fascinating. I'm curious why you choose, because clearly you have the background, you have the team to build something from scratch and just sell some apps, but you chose the acquisition route to buy them and then then bring them into the kind of the umbrella, maybe improve upon them, and then to just add value. Like, why you chose that model? Is it because it grows much faster?
Right now, it's the most efficient thing to do to grow.
Yes.
We want to build our own apps as well. Our means to getting applications, it can be anything, right? Like we're trying to build a software suite. If we need to do that via acquisitions, we can do that. If we can do that with rebuilding apps we purchased, we can do that. If we want to build our own apps, we can do that. We have 27,000 merchants that are using our software. That's a treasure chest of data, but that's also a bunch of merchants who can buy other software, whether it's software that we incubate or software that we acquire and bring it in.
And it pretty much, it reduces the risk drastically because you've got the merchants. As you grow it, you could grow to 30, 40, 50,000. And any product you bring to them that you generate X amount of revenue, and you kind of work that in the acquisition costs, and doesn't matter, use of debt or whatever it might be. It's like it's a very surefire thing. Let's put it this way, right?
100%.
Yeah. And share with me, what are some of the challenges that you faced, like growing the business and just building Stay Tuned? I'm sure there's a lot of stories, right?
Oh yeah, I mean, you can. There's, the biggest challenge is you take on a product that's not built by yourself, and you have to figure out how to make it fit with an entire group of new people and a team. So there's a lot of technical debt that goes on. There's a lot of learning the product and learning the features. I'd say the other thing is there's just been a lot of uncertainty in the market recently. Rates are going up. All the things that are happening in the market makes it a little bit more challenging to navigate and forecast. You can manage that, right? We're professionals, but the technical debt and what you inherit, it tends to be a little bit more challenging from time to time.
Yeah, maybe there's some hidden problem, the code, who knows, right? Yeah.
Exactly, right? We ask all of our developers who build to put unit testing in so we can test the code. We ask them to upgrade the software to the most recent versions of the software. So there's a bunch of things that we try to do. Other than that, we run into all the same issues that other startups run into, from hiring to churn from time to time to, we're a startup just like everyone else.
Mm-mm. And then, how do you view just like the future of commerce? What do you see like where? Because I think the industry has shifted quite a bit in the last few years. Like, what do you see?
I think the biggest thing I see is, I mean, it's pretty much what I was saying on the outset.
Yeah.
You've got these two massive companies
Yeah.
that are only getting
Correct.
bigger.
Yeah.
Shopify and Amazon
Yeah.
are eating all of commerce.
Yeah.
And
Kind of
I
like
think
the Pac-Man.
exactly like
Right?
there's if you want to go direct, you go Shopify, whether you're Glossier, which
Yes.
just announced that they're in Shopify, or whether you're a small brand.
Yeah.
And then if you want to have a non-direct strategy or want to have some component of a marketplace, you go to Amazon.
Amazon. That's it.
And that's just becoming more and more like persistent across the world. So that will just continue to grow and get bigger and bigger and bigger.
I see that. And then so out of two, of course, Shopify, that's the big whale. We kind of chose to, it just reminds me kind of the big whale, and then you got the little fish attached to the big whale and kind of riding the wave, right? Until we become big whale ourselves.
And exactly. And look, when Shopify's strategic direction is to go get enterprises and go increase market share and
Correct.
in internationally, you follow those trends and you buy tools around those trends. I absolutely think we'll be in the Amazon ecosystem too, and we'll follow the trends. Right now, Shopify just feels a little bit more familiar for us because it's a very, very open app store, and it's very conducive for building.
Yes. And how with Stay Tuned, how do you guys now attract customers, attract users, and retain them?
So we do a lot of marketing tactics. We use customer service almost as a sales channel, or we're cross-selling across our merchants.
Oh, interesting.
We're in the process of bringing on an enterprise salesperson who would go to some of the larger. So just like any startup, I would say. So we do everything from enterprise sales to using marketing and customer services as a customer acquisition tool. And yeah, that's
with the merchants that you have, are they mostly like small business right now, and you kind of want to expand to enterprise, or like a percentage of them already enterprise?
Yeah, they're everything. We have everything from small to enterprise. What's the cool thing about they're all over the world. It's a very good, we have people in Asia and Europe and Africa and all over. It's like, it's super, super cool. And like what I said in the offset, like I come from a very international background. I'm Armenian by descent, and I'm born in Lebanon. So for me, this like international perspective is a very, very cool thing.
And how do you stay ahead of the curve, like with all the changes that's happening?
You stay in the developer communities. There's Shopify Slack channels, Shopify Facebook groups, Shopify communities. Always stay in those channels, in those communities. So that would be like that's the most important way to do it. And then just stay up to date. Shopify does Shopify Unite. We're conferences like Shops. What was it? Shop Talk, Money 2020. All of these conferences are the ones that you want to be in and around. And yeah, we have a presence in these things.
And in some way, I think just the existing merchants, we could get so much feedback from them and say, hey, what else do they need, right? From the data, from there, it's great building customer base, but also building future customers, and they will tell us what they need. It's like, it's the good old, find out what they want and give it to them, right?
Exactly, 100%.
That makes sense. What's your vision for the company, like say in the next 3 years?
I mean, I'd say we want to build the Adobe or Salesforce for e-commerce. Worth tens of billions of dollars. We run very profitably. Obviously, we invest in our growth, and that will shift back and forth like any startup. But I think if we decide we want to go public in the future, this is a type of profile of company that would do very well, high margin enterprise SaaS company. I think we want to get this thing as big as possible. But I think there is no Adobe, Salesforce, Oracle of e-commerce right now.
Correct.
I want to have the biggest merchant base in the world of e-commerce brands, and build the largest suite that sits on top of them.
What are some of the key milestones, accomplishments that Stay Tuned has accomplished?
ARR, I won't share the exact number, but
yes,
we're way ahead of what we thought we were going to be. at this time. We've done, more acquisitions than we thought we were going to do. So I think those are the two things. The main metric we actually look at is it's a twofold: the number of brands and the amount the brands are using across all of our software.
Could you share maybe just the growth from the first year, second year, third year, roughly?
Yes, we're doing about 40% year over year.
Amazing. And and Stay Tuned started when?
Well, so we started around 2019. We moved into this space in 2021 after starting us. Startups are not linear paths. They are always up and down and left and right. But we started building one thing and we decided we wanted to have more. So, this strategy really started in the middle of 2021. The company started in 2019.
And last time I think we talked to you, shared with me that going to new year, you want to do way more acquisitions, more aggressive in terms of acquisitions, right? What's your target?
Yeah, so we want to get bigger. We want to do more. Right now, each acquisition progressively gets bigger and bigger and bigger. We want to continue to get bigger. We have some very exciting financing news, including you guys.
Yes,
we'll be making. I don't know when this comes out, whether or not we would have announced it or not at that point, but that will enable us to be a very big player in the space and have a large balance sheet to go after these acquisitions.
Yes. And I know you're also securing some venture debt, right?
Yep. Our existing debt is with WTI, and we have a network of amazing lenders that we can go to.
Amazing. I mean, looking forward to it for sure. Serge, let's say for our founders, what advice you have for them if they're listening? They are just building their tech, they're building the startup. What advice would you have like for anyone that's also on the same path?
When I started this company, I was like so sure, okay, this is going to be this is the path, this is what I need to do. Every startup story is completely different. Every founder is a completely different personality, and the path is not linear. There are pivots, there are changes in people, there are changes in products, there are changes in customers. It's all very, very hard, but it is not a linear path. It's constantly changing. I was very used to kind of like a linear path my entire career, like moving up.
Yes.
And it's a complete zigzag. And the zigzag can be stressful, but you also want to enjoy the zigzag.
And then with your team, like what are they like? How big is the team right now?
Right now we have 26 people, but we have we'll probably, when this comes out, we'll probably be north of 30.
Perfect. If they want to find out a little bit more about Stay Tuned, what's the best way?
Staytuned.digital is the website, and you'll see all of our social.
Right?
Yeah, Stay Tuned, like all one word, and then .digital.
That's perfect. Well, thank you, Serge. Thank you for being on the show. Look forward to hearing more good news when this comes out. I mean, by that time, I know next year is going to be a very, very exciting year, right, for Stay Tuned. So thank you for being here. I appreciate it.
Very, very, very glad to be on. Thank you.
Thank you.
We appreciate you joining us for this episode of $1 Billion Startup. Be sure to rate, review, and subscribe to the show. And visit DragonX.com for more resources based on today's topic, as well as for access to previous episodes. That's DragonX.com. Thank you for listening.